Hey everyone, Anthony Gerbi here with another edition of Thursday Thoughts. And what I wanted to talk about today was one of the most popular conversations I've been having lately, specifically regarding the question, Anthony, I've got a little bit of money in the bank. What can I do that's better than a savings account? I actually have some good answers for you now, as opposed to a year ago when nothing was earning anything, it felt like. Before I get there, though, if you haven't already, please subscribe to our channel if you wouldn't mind. It really does help us out. So what's my answer to that question? I usually, if you asked me that question, you, the watcher here, I would probably give you a rundown of different options relative to your specific situation. But let me go through the main options that I would recommend to most people these days. Number one is a concept called a bond ladder. Now, I won't get into exactly what that is here because it would take a little bit longer, but suffice it to say, over a 15-month period, you can earn, right now, 5% interest guaranteed as long as you don't touch the money, but you can touch the money. You just accept a little variability with the interest rate if you do. So it's not like a CD that has a penalty. That, by far, has been the most popular option so far. Even just regular old bonds, the bonds we would invest you in your normal portfolio are earning, depending on what kind they are, maybe between 5, 6, some are even close to 7% these days. That's not guaranteed like that first option, but it's still historically much more conservative than stocks. So that's another good option. There are just CD rates at the bank that are fairly attractive right now. Most of them are going to be around 4%. So the 5 I mentioned at the beginning can do you a little better and you give up the liquidity. It's still worth considering. And maybe the last thing that on this list that makes sense is an annuity. And that's often a dirty word for a lot of people. Maybe some people have bad experiences with annuities because they have all these restrictions and lockups, and sometimes they have high fees. The specific type of annuity that I'm talking about has no fees. It's called a fixed indexed annuity. Gives you some participation with the stock market in case it does well, but gives you no downside. So you're guaranteed not to lose a penny. Now, of course, there's fine print, and we would go through all of that. But those are some of the common answers I would give to that question. And number one so far has been the first one, the bond ladder concept. So if this is something you've been thinking about, give us a call and we'll sit down and see which one makes sense for you. Thanks.